my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited, and here is your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City. I said here last week that what I find interesting here in Kansas, compared to say Chicago wheat, is not so much the similarities, such as the double top, nor the testing of congestion, but the differences. Specifically how the bullish Andrews pitchfork for the December 2020 to late March 2021 action is still valid. Now, admittedly, we've had a number of breaches of the upper time, currently at 746, and even a singular close over it, but no consecutive closes nor anything like it. The same applies to the downside. Since last week, the market punched down through the short medium moving average, currently 633, and the medium moving average, currently 632, and perhaps more importantly, the thick band of congestion between 618 and 619 that contains within it the recent 50% Fibonacci line at 636. The 50% Fibonacci line also of the big old 2014-2019 move at 619. All these eroded the bearish incentive, such that when this past Wednesday the market punched down through and even closed below the lower time, currently 611, well, it was a seeming low water mark in a decline, and prices reverted back up. This reversion back up was interesting on its own, as the market rose up through all the supports, which had now become resistances, only to halt at the recent 50% Fibonacci line at 636. I'd now like to discuss something I put forward last week. The opportunity here to have a bearish bump and run reversal top does not exist. Not exist here. The uptrend for this would be from December 2020 today, currently at 576, which is below the long moving average, currently 583, and in no way looks capable of being a bearish bump and run reversal trend line. Now, the absence of bearish evidence does not in any way mean that things may be bullish, but it does go a way towards it. However, if the pullback that we've seen this week should fail, then we could look at the action this week as being the flag in a bearish flag pattern. It is not perfect, but it could set the stage for a move down to the 560s. The question is, how good is this pullback? If it were to follow the usual conventions of a double top, Adam and Adam type, which is what it is, then you might expect a possible move up to the 688 area, or roughly where the middle time, currently 678, would be in about 2 weeks or so. So the supplementary question is, will it try back up to the 688 level or drop to the 570s? Minneapolis wheat. I have repeated this now for a number of weeks here. There are once again a number of differences here in this contract compared to the Chicago and the Kansas City contracts. For starters, and after seeing this week's action, perhaps supremely important is the August to December 2020 bullish Andrews pitchfork, which has run this market higher so successfully, is still valid. Yes, it still works brilliantly. We are in between the overhead middle time, currently at 751, and the lower time below, currently at 677. This is so different from Chicago, but not so much from, say, Kansas City. Next, the top formed here over the start of May is not a double top, completely different from both Chicago and Kansas City. Now, you could argue the peak was a sharp angled and lopsided head and shoulders top, but I would think it would be stretching it a little bit too far. Anyway, the fall had started to peter out well short of any January to March congestion we have seen elsewhere. On this chart, that congestion would be down between 657 and 628, well below the recent low of the market. Yet we started to slow last week, and then into this week, and the only significant support nearby, which happened to be true, was the rising short medium moving average, currently at 690. Hence, this contract looks more positive than the others, especially Chicago. This market started to show indecisive spinning tops and bullish hammer patterns at the end of last week, going into this week, and it was an indecisive spinning top this past Wednesday that marked the low when it reached the testing, rejected the testing of the combination of, and there's a list of close together support. The lower tie, the recent 50% Fibonacci line at 675 and a 50% Fibonacci line of the 2016-2017 move at 674. This rejection led to yesterday's pretty impressive bullish opening white Mariposa. Today we've risen higher still, unlike Chicago and Kansas, and it would not be beyond the realms of reason to see a move up all the way to the middle time, or maybe to the August 2017 high at 754. Let's wait and see if this is true or if the prices falter beforehand. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.